The goal here is I want you to understand the principles of accounting. So what I'm going to do is I'm going to kind of frame a lot of these things in terms of like how we typically think of them in our personal lives and how it works in a business. For almost every concept, there's a corollary. Corollary. For everything that we do personally, there is a business version. So normally in personal life, we only think about things like the money coming in and the money going out. But there's a lot that's happening inside of our personal finances, even if it's not money going in and out of an account. In a business, when we think about money coming in, it's usually from earning like a paycheck. When money is coming into a business, that's called revenue. And then when we spend money in our personal life, there's kind of two ways that we do that. We have to pay for things that we don't own, like our power bill, phone plan, et cetera. You don't get to take possession of those things. Those are expenses in a business. But when you buy things to own them in a business, that is called a purchase. So we have an expense, which is something that money goes out to keep the business running. And then a purchase is when a business acquires something that it owns after that. So other things that we do with our money that aren't necessarily transactional. So we save money in our personal lives. So that's the money that's left over from what we've earned, and what we've spent is the money in our savings, right? So in a business, that's called net income or also profit. So that's the money left over after all of our expenses. We also own things in our personal lives. So we have possessions in our personal life, and a business has assets. We also might have debt, so money we owe, and in business, that's called a liability. We might also invest in things in our personal lives. So that's money you put into something with an expectation of a return. And in the case of business, you're doing that as you capitalize the business, or you make a contribution or an investment into the business. When we take money out of an investment, that's called a withdrawal. And in a business context, that is an owner draw. Also can be called a distribution, which is what it would be if you're an S Corp. And then we also can think about our entire net worth, the entire value of our money and our possessions. So like if you own a house, you own a car, and you have a bank account, et cetera, we call that equity. So this is all of those terms that we use in personal life and then how they're categorized in business. So revenue, let's talk about the money coming into the business. Revenue is every dollar that somebody pays you for either selling something or providing a service, et cetera. There are other forms of income like interest income, like on a bank account or whatever. That's not revenue because you didn't earn it through performing a service or sales. So the example of this is like somebody pays you $50 for a haircut and you sell them a $40 bottle of shampoo, color somebody else's hair for $200. That's $290 in gross revenue. So each one of those items is a revenue item. And then gross revenue is the total of all of the money coming in. So things that revenue is and is not. So revenue is sales of products and services, rental income from any assets. What revenue is not. I emphasize this a lot. Revenue is not, I made this. So when you say I performed a haircut, I made $200. What you made is the net income off of that. So you made the revenue minus expenses. That's a very big difference. A lot of people will talk about like how their business performs in terms of revenue. You could be doing $1 million of revenue a year and have $1.1 million in expenses and actually have a company where you're underwater. So don't think of it in terms of what I made. Think of it in terms of what you sold. And actually, I just kind of explained the next one, which is like, it's not an accurate measure of business performance. Two other things that are going to be applicable in your case are going to be tips and sales tax. Neither of these are actual revenue. So even though you're collecting them on behalf of another entity. Let's say Liz gets a $40 tip on a color service or something like that. Well, you owe her that tip. It's not money coming into the business. You are just collecting it and then dispersing it. So that becomes a what for us if we have
liability.
A liability, hell yeah. Sales tax is another one where we're going to collect that, but we owe it to the government because we collected it on behalf of the government.
So is that technically a liability as well?
It's a liability.